So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions.
Hello, everybody. Welcome to the Build to Millions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. And we believe the key to scaling and compounding your wealth and life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth and life so you can give more all the way to help MVPs, the most vulnerable people. Hey, my name is Brett Swarts. Each and every episode, we're joined by some of the world's top entrepreneurs, millionaires, and billionaires, where they share their stories, insights, and wisdom with us so we can all level up and compound our impact. I'm excited about our next guest. She had the great state of Alabama, and she's the CEO of Spartan Invest, a turnkey investment firm that specializes in the path to passive income through single family, kind of done for you rentals. They operate in Alabama, Tennessee, Georgia, and Spartan Investments handles the full cycle of investment properties from sourcing and renovation to construction. Again, all turnkey, pretty awesome, with over 50 million real estate transactions annually, and portfolio of more than 2,000 properties under management. Her and her team help deliver consistent results for investors nationwide. Please welcome to the show with me, Lindsay Davis. Lindsay, how are we doing?
Thank you so much for having me on the show, Brett. Good to be here.
Grateful to have you. For our listeners get to know you for the first time, would you give us just a little bit more about your story and your current focus?
Yeah, absolutely. So like you said, Spartan Invest, I'm CEO and co-founder of Spartan Invest, a full-service turnkey company. We are based out of Birmingham, Alabama, if you couldn't tell from my accent, and we operate in Alabama, Georgia, and Tennessee. Essentially what we do is absolutely everything. So for those looking to invest in single-family homes, we acquire, renovate, then resell all of our single families with the partnership, or we have our family of companies that has our property management company as well that will continue to manage them after the fact. So they place the tenants, they handle the move-outs, the maintenance, and our main goal is really to be kind of the white glove in real estate investing. Most of our investors are really from areas where it doesn't necessarily make a lot of sense to invest in that local market, like Southern California and Hawaii, New York, those type areas, or those that just may not have the time or really the want to of investing and dealing with management.
Excellent. So if you want to learn more about Lindsay, you can go to spartaninvest.com, spartaninvest.com. Love that, right? Basically done for you real estate investing, out of state, out of sight, out of mind, put up the capital. It seems so easy, Lindsay. Like, why wouldn't everyone be doing this?
Why wouldn't they? I don't know. That's a great question. It's like we really target those investors that want to diversify their portfolios. They want to diversify their retirement, or just basically generate some passive income, and may not want to do all of the due diligence to know the target markets in order to purchase, or what the market rent would be, or what the local landlord laws are in order to handle, in the event of eviction. All of those things, like, we are handling for investors. There are some investors out there that want to be more involved, that want to manage the property. They want to be the boots on the ground. But for those of you that don't want any part of that, don't want to deal with the 2 a.m. calls that a toilet's overflowing, that's what we're here for.
Okay, great. Let's break all that down. So give us an example of a recent transaction. What was the purchase price? What was the debt? What was the NOI? What was the cash on cash return? Or just give us something bring it to life here for a recent deal.
Yeah. So I'll talk more in averages, because we do ton of deals. We sell
Sure.
about
No problem.
250 properties a year to investors. And like you said, we have a little over 2,000 doors under management. So we also have a new construction company that will build single family homes for rentals as well. So we have a couple of different products for our clients. The renovated single family properties, they're on average, our purchase price is about $165,000. Right now, we offer a forward commitment. And for those of your listeners that may not be familiar with that, that's the bulk buy down that builders have been doing for decades. That's how they offer the very, very low interest rates. We are also doing that. So we buy in bulk, interest rates down to a 5.5%. And so if you're interested in a Spartan Invest home, you're coming to the table with 25% down of $165,000. Our average return, if you're financing the property, because that'll vary. If you're a cash on cash, if you're purchasing it with cash, your return is going to be anywhere from 5.2 to 5.7, anywhere in that range, depending on the price point. And then if you're financing, our average returns are going to be anywhere from about 9.5% to 10.5%. That's with the 5.5% interest rate, and that's also with a 9% property management fee as well.
Okay. All right. So thank you for that. That's very helpful. So give me a specific deal that you've done recently, right? The cost was X, right? Anything, and we just get a little more granular here, right? Because when I hear 5.5, 5.2 to 5.7, here's my biggest pushback right now with a lot of real estate equity deals. And maybe we can talk about bonus depreciation and the ability to cost seg and these kind of things to offset some of these things and get tax flow going here versus just cash flow. But when I hear 5 to 5.7, I'm not that excited, Lindsay. I'm like, gosh, like really? And I'm tied up for, 3 to 5, maybe 10 years. Interest rates are so much higher and I can get debt that's like 10% plus, and I get my take the last couple of years, and maybe push back with me, right? Is that as deals come down in basis, you're buying on basis. But it's been tough because the negative arbitrage situation that's typically going on with these cap rates versus the interest rates. And so we've been going to a lot of debt that's double digit, 10 to 16%. And it's exciting because it's passive, it's first position, and no tax benefits, right? That's the downside. But give me more excited from the 5 to 5.7 on the unleveraged cash on cash. I see the 9.5 to 10.5. That is better. Right. But help me. What am I missing? Because this real estate market, it's hard for me to get my hands around it.
I'm so sorry. I'm confused by the question. So the cash on cash return was anywhere from 7.2 to 7.7. And then your leverage return was about 9.5 to 10.5. Our interest rate is 5.5%. So that's where the 5 is. Okay. So yeah, those returns are a great deal higher than what you just quoted.
Okay, got it. Okay, now I'm with you now. And so, but the average deal cost me what? If I'm an investor, I need to put up $100,000, $200,000, $300,000. What's the average down payment?
Well, if our purchase price is $165,000, and then you're 25% to the table, that's what, $42,000 with closing cost, and then of course we always encourage everyone to have a retainer of about $7,000. So you're looking anywhere from about $45,000 to $50,000 based on, the price point, which can vary from property to property.
Okay. All right. I'm with you now. And then do you do like individual, do you JV with clients, or is it more so you're getting them 100% ownership?
100%
Walk us through
ownership.
The structuring of it all.
100% ownership. They are buying the asset, the whole asset.
Okay. But you're managing everything. So they just basically show up with about $50,000, hire your service. You're going to locate, you're going to find, negotiate, under contract, close it, manage it, everything turnkey, deal with the maintenance, deal with all the issues, and they're going to get that passive check. Is that a fair summary?
That is the goal. We want to just create mailbox money. So our team is going to reach out to you every month and say, hey, your money's coming to you based on the rent collection that we've done. And your ACH it's not really mailbox money because we don't send checks, but you get what I'm saying is ACH transfers for all of your income. Yeah. But yes, and we're already purchasing all of the properties. We're not necessarily waiting on clients to say, hey, I want to purchase an area, or I want to purchase a property in this particular area. If you go to our website,
Okay.
we have an inventory page full of already renovated properties. Several of them are already rented, cash flowing, that you can go through, analyze which ones you want, and then pick based on that.
Oh, that's nice. So you've got a whole, it's just ready to go right now. And they're just buying it from you guys. And that's even better because you guys have already been through it all. And so I like it. So Spartan Invest, everybody, SpartanInvest.com. You can go there and to learn all about turnkey done for you properties in places that Lindsay and her team live and understand and can help you from A to Z on this. So talk about cost seg bonus depreciation. If you part of the big beautiful bill that just got passed. How are you encouraging people on a property that's about 165,000 to do that, or is it not scaled because it's so small? Like what is your strategy when it comes to offsetting tax with bonus depreciation?
So for the bonus depreciation, since we're not CPAs, we definitely encourage everyone to talk to their CPA when discussing any kind of bonus depreciation, but we have seen a lot of clients steer more towards that because the write-off is a great deal higher when you're dealing with the new construction properties where just because the cost segregation benefits just are much higher with the energy efficiencies, et cetera, et cetera. And so our price point for our new builds are anywhere from $250,000 to $300,000. And so we've seen a lot of clients take advantage of that.
Okay, so let's do a $300,000. Which when they're at? Is that cool right now? On a $300,000, is that a single family? Is a duplex? Or what do you get for $300,000?
It's a single family.
Okay, and then what's the average rent for that?
Average rent would be around $2,400-$2,500.
Okay, so use $2,500. Do you factor in a vacancy factor of 3% or 5%? What do you guys typically do for
4%.
that?
4% on
4%, okay.
vacancy. And we run right at about a 95% occupancy, 52-week rolling.
Yeah.
So, but on average, that's what our investors will typically experience is about a 4%.
Cool. And then what percentage of the gross income do you anticipate goes to expenses? Like what ratio do you use? Do you use 40%, 50%, on a new build? is there like a general ratio that is going to come back for expenses?
Not necessarily on the new construction, just because there is not a ton of maintenance until you hit about year 7. So it's really hard to determine that. And since we've started building new construction properties in 2019, our average length of stay is over 36 months. So there's not a lot of turn that you really need to adjust for. Tenants do tend to stay longer in new construction homes, and but they can also be a little bit bigger, so the turns can be a little bit more expensive. It's really hard to gauge exactly how much. We always say that you want to bake in 5% of your annual income each year for maintenance and expenses. But again, the mortgage, if you're buying it all cash, you've got property taxes, insurance, which averages anywhere from $1,100 to $1,600. Alabama is one of the lowest property taxes states in the country.
That's good. Yeah. Okay. So I know when I underwrote multifamily properties in California, we always did like 40% to 50%. Now these are older properties, right? It's a whole different animal when you're so many units. So you're saying for the first 7 years, did I hear you correctly? Like 5%, is the expense ratio for the gross income. And so if I collected, let's say 28,000, or did I read that wrong?
No, I'm saying that 5% is what we tell people who purchase renovated properties to bake in for overall maintenance. Now, with new construction, you tend not to see maintenance until you get to year about 5 to 7. So where we see that is anywhere from 2 to 3% each year. Okay.
All right. And so I'm just doing some simple math here. If I had $2,500 by 12 and by 4% vacancy factor, I've got about 28,000. I'm going to even use just 25% of that is going to be expenses. So now I'm at 21,600 divided by 12. So about $1,800 a month. Does that sound way off, or do you think it'd be more a net cash flow ACH to me if I'm the investor on $300,000 deal?
Well, again, it depends on your down payment and how much you put down.
Yeah. Put it all cash. I
All
just did.
cash.
This is
Then, yeah,
300,000.
that sounds about accurate.
Okay, excellent. And so there and 300,000. Okay, cool. I'm just, I always like to get down to, so that's like a 7.2%. So honestly, that's kind of what you said it would be. So I just did the math on that. If anyone wants to try to do the math on that, you did $1,800 by 12. And if I paid $300,000 for it, I take the annual 21,600 by 300, and that's 7.2%. And backing up, I did $2,500 times 12 with a 4% vacancy factor, and I did a 75% collections of that. So I'm estimating about 25% for expenses, not counting vacancy, and that gives me the 21,600. Okay, all right. So now I'm with you now. So now, do you find people are repeat buying, Lindsay? So they set a goal, like I call it the truly passive income number. You know, it's 5, 10, 15, 20, 30, 50,000 a month, whatever it might be, and then they're reverse engineering it. And they're like, okay, I don't have to do anything. I just need to put down, 50, 100, 200, whatever I have, let Lindsay run and her team run the show, buy these houses. And then I get this passive income to a point where I don't have to trade any more time and my energy. Walk us through your truly passive income kind of model and how it helps people to get freedom.
So it differs from client to client, but about 65% of our properties sold are repeat purchases. So investors, and usually this is new to them. They are new into the turnkey space. So they'll start off with purchasing just one property and see how that goes for a little bit. And then they'll come back and buy a couple. But what we try to set clients up, and again, a lot of things happen, life happens, so it doesn't always work out like this, but they'll buy up to 3 properties, and then the cash flow, the incoming cash flow that they're able to get from that. Now, most of our clients do finance their properties. So their average cash flow is, their net average cash flow is anywhere from $250 to $300 a month. So it is different than the numbers that you just discussed. But what they will do is take that net income month over month and take that and buy that down on the principal of one of the properties. And that's what we try to encourage, is that if you want to generate the cash flow, then you're taking the net for the first, and I think it takes like 3.6 years to, if you took all of the net for the 3 properties and paid it on that principal, you would have one property that's completely paid off. But we do understand that cash flow is not necessarily the end goal for all clients. It's, the potential for appreciation, it's tax deductions, there's a plethora of other reasons. We have some that will purchase a property on a 15-year note every time they have a child. And so the tenant pays off that property. They don't pay any additional towards the principal. And then the goal in mind of once that property's paid off and their child is 15, they'll sell it, and that'll be their college fund. So it really depends on the ultimate goal of the investor, because we have so many that are setting up their portfolio for various different reasons.
I love the creative incentive, right, for the child. My wife and I have 5 kids, and so that can quickly add up for all of the things. And 4 daughters, which maybe you can do like one for a wedding one, and then
wedding
also
property. Yeah, absolutely.
Yeah. And by the way, you can learn more about Lindsay Davis by going to SpartanInvest.com. SpartanInvest.com. They provide single-family investment properties at reasonable market prices, and they do everything for you. So that you don't have to do it all yourself, but you can still get excellent returns. Okay, what other secrets that would you like to share that I haven't already asked so far, and then we can maybe geek out on some tax stuff?
Well, I probably won't be able to hang with the geeking out of the tax stuff, just because it's not. I live partially in that world. But I think that a couple of things to take into consideration when your listeners are evaluating different areas to invest, if they are looking to get into the real estate space, there are several turnkey providers out there. And so just working through the due diligence, making sure you're asking the questions, making sure that you're purchasing a property that also has the property management side as well. That is really ultimately going to be the driver in how your property performs long term, and that you can buy a property at a great deal, but if the management is not there, if it's not managing the property well, you could just get yourself in a lot of issues. And there's a lot of questions to ask. We have a lot of that information on our website, like you said, of, hey, due diligence questions and when you're evaluating. Also, take into consideration the different markets and, hey, what is the overall affordability what's the population growth, what are the economic drivers, and then gauge the landlord friendliness, because that's going to be a very big factor in whether or not your rental property is successful. If the local government is on the side of the homeowner and not necessarily the side of the tenant, and that sounds mean, and that doesn't mean that property managers in Alabama are slumlords, but our laws are governed to really protect the property owner. And so that's another key indicator that you want to look at when you're deciding what market to buy in.
100%. That's really helpful. I love it. Yeah. So affordability, population growth, landlord friendliness, and the key, having a property manager who knows all of those things that can do that for you. Because the worst thing you want to do is be out of area or out of state buyer and be overwhelmed with the nuances there. Okay, cool. By the way, I'll tee up a really simple one. I think you'll knock it out of the park. When it comes to the 1031 exchange, I'm just kind of curious. Sometimes it can put people in a box, right? Because they're selling and they have this 45-180 to identify and close. What has been your biggest frustration when it comes to the 1031 exchange, or what are your thoughts on that?
We have a ton of clients that are utilizing 1031s, and we've seen a pretty big growth in popularity with just how property values have just skyrocketed. And so they're able to sell one particular property in California and buy, 6 or 7 in Alabama. It's insane. And so it's a very good program in order to defer your gains. But some of the frustration comes with either you've got the 45 days, and so they've already sold. They're a little bit later to the game, so they've already sold their property, and now they have to make very quick decisions on trying to identify a property. And that just doesn't open, or that's never ideal when you have to make very large purchase decisions in a short time frame. So if you are interested in a 1031, go ahead and start doing all of the due diligence as much as you can before you put that property on. And then a lot of times too, we have a lot of clients that are coming to us saying, hey, I'm going to do a 1031. I haven't even talked to anybody. I haven't even talked to an intermediary. I haven't put my property on the market yet, but I want to go ahead and put this property under contract. And we're like, hey, we can't do that as well, because then we can't hold the asset and tie up the asset for an undisclosed amount of time, because our inventory does flow relatively quickly. So there's just a couple of different things that you just have to work within. But if I had to choose, I would encourage people, if you are doing a 1031, to do as much due diligence on the very, very front end, so you don't get caught in the I've got 10 days. Because we've had clients do this. They'll come to us and be like, hey, I've got 10 days to pick 6 properties. And we're like, oh my goodness. Okay, let's do, so, but it just, and then you feel like you have to make very rash decisions, and that's just never ideal.
Yeah. We call that the shotgun wedding, Lindsay, right? It's like, you got to get engaged, you got to get married. And you're like, gosh, how does it really work out in the past for other things in life? And so these are big financial decisions, right? This 45-day, hair on fire, 180 to close. And the sellers, at times, they know you're in a 1031, and they're not likely to give you any kind of credits, and less likely to be able to negotiate with you. And so these quick decisions often cause people to overpay, not have enough liquidity or diversification. And then, in 2008, I saw the worst of it when people lost half or all their wealth, mainly due because they kept doubling down on all of the rapid appreciation that was happening. I was in California at the time, and people were, lost half or all of their wealth. And because they thought that they let the tax tail, wag the investment purchase, and the timing of it. And this is part of why we started our company called Capital Gains Tax Solutions, to eliminate the need for the 1031 exchange. And it works for businesses, real estate, Bitcoin. You can exit and you no longer have to run around with your hair on fire, but you can still buy investment real estate. It's called a Deferred Sales Trust for those who are listening. And it's great because it's an installment sale with a trust, but it no longer requires you to 1031 exchange. And so, for example, you can sell Bitcoin, defer all the tax, and then you could use that trust to go buy turnkey rentals. You could sell stock, you could sell businesses. In other words, it's kind of like a 1031 for all assets in a way. It's through an installment sale with the trust. And so we did a $13 million exit in California, and the clients bought into multifamily debt funds. They bought into hotel syndications. They bought some Bitcoin. They diversified because we saw the market being pretty hot a couple of years ago before interest rates shifted. And it's a powerful way to defer tax and not have to suffer the consequences of the 1031 timing restrictions. If anyone wants to learn more, you can go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com. Have you ever heard about that before, Lindsay? I'm curious. And how might that be a game changer for even capital that wants to come into your turnkey rental space, but they have to sell the Bitcoin and pay the millions of tax. They have to sell the business and pay the millions of tax. And now this can be a bridge to be able to sell, defer, and still buy all of these turnkey rentals.
There are a couple of clients that we've worked with that work with us closely on helping some of our investors set up these trusts in order to kind of move their assets and their investments too. But I really can't speak that well to that because that's kind of a third party that we work with. But I've had several clients be very successful with being able to do that and not have to pay capital gains.
Cool. All right. Thanks for sharing. Moving on here. So what about the marketplace? What is your sense? Where are we? I feel like we hit a little bit of a lull for this summer, at least here in Florida, where it's like a weird spot where everyone's waiting for Powell to maybe lower the interest rates, or he's not, or this whole kind of, I've heard this, it feels like a little bit of a stall, but I don't know. Are you seeing the same thing where you're at?
We've seen a lull, but we also saw a pretty significant dip in April with all of the stock market volatility, and that we see that trend because we are in the investment real estate space, and that we tend to follow the trends of the stock market. So if it's up and down, and if it's pretty violent, we feel that as well. So we saw a pretty significant shift in April, which is unfortunate because April and May historically are our busier months, whereas June and July are just historically our slower months, and that a lot of investors are on vacation and not necessarily analyzing property deals. So that's been unfortunate, is that we've had a longer lull period. We are starting to pick up a good bit more over the last couple of weeks. Which has been great. But again, there's a lot of hesitancy. We were really excited about the Fed possibly cutting in September again, but now they're coming back and saying it may be only 25 basis points just because of the recent PPI that came out. That was a lot higher than they had anticipated. So again, I feel like it's a gamble, and I honestly feel like I've been saying, hey, they're going to cut, or we'll start to see a decline, I don't know, for the last 2 years yet. And I've yet to be right. So
I know. I'm with you. I said it was like survive till 25, right? They're going to cut all these things. And yeah, I'm the same way. I don't know. No one really knows, of course, but it feels like it's even harder to predict these days. So, okay. So that being said, you keep buying real estate, keep finding opportunities. I still think it's an opportunity to negotiate and find great deals. Absolutely. I feel like it's more of a buyer's market than a seller's market, or at least more than it's ever been before. So I do think you want to take action in these type of markets of uncertainty. It's typically where you find the buys. And so, okay. Any other thoughts on that before we move to the lightning round?
Well, honestly, we're constantly still buying, and we always have investors still purchasing, because the increase in rental demand is just has continued. You look at baby boomers, and 77% of baby boomers owned a property at 35, whereas now in your millennial generation, you're only at 43%. So the increase in demand for rentals continues to go up as we make this shift, because the affordability is so terrible. We're going to continue to make this shift more towards a renter nation. And so, the demand and the overall security of rental properties as an investment is just going to continue to increase. So we're going to continue to chase these deals, because we do know that is going to be a safe option in the future.
Awesome. All right. You ready for the lightning round?
Okay, let's do it.
All right. Know what you know now, Lindsay. If you go back to your 20-year-old self, what's the one gold nugget? Make sure you tell yourself to do.
20-year-old self? Oh God. Geez. I'm terrible at lightning rounds. I can't think that quick. I don't know that I would say anything. I don't know. That's terrible.
We'll come back to it. We'll come back to it. Question number 2. Number one book you've recommended or gifted most in the past year.
One of my favorites that I reread probably about 6 months ago was Good to Great, Jim Collins. One of my favorites.
By the way, we were just going over that one of our core values at Capital Gains Tax Solutions is a 20-mile march. What does the 20-mile march mean to you and your team?
The 20-mile march means, I would probably say more just endurance, maybe. One of our core values is industrious. We are dispassionately objective, industrious, honest, and extremely focused. So I think more that falls in line with our industrious core value.
Yeah. It's great. And that is a great book. Everyone should read that book. Question number 3, what are you most curious about right now?
I'm more curious about the effects on the service industry, just based on recent numbers that have come out, and it's not necessarily been tariff related. It's more been service increases, being in new construction and maintenance. We have an HVAC company as well, so I am curious to see how that could potentially impact us in the future.
Excellent. Question next, I think it's number 4. What number 1 leadership quote or theme that you strive to live by?
You know what? This is probably a little bit unconventional. Huge Ted Lasso fan. So it's like, hey, if you're riding a horse and it's comfortable, you're probably doing it wrong.
So good. If you haven't seen Ted Lasso, please do yourself a favor, watch the show.
It's a great show. There's a million great quotes in there, but.
Yeah, I love it. I think we're pretty much out. And then this is the last one. So after all your success, Lindsay, helping all the people you've helped get some passive income, buy some real estate, help and, be a part of the housing solution to the housing crisis. How do you best stay centered in your values and also stay encouraged to charge even higher heights?
My number 1 value is my family. I'm married. I have 3 children. And my job it can be very, very demanding. So what I try to do is set a schedule of exactly how many hours I'm going to work. And I can't do that in a week because weeks vary a lot. So I try to do it on a monthly basis on, hey, how many times am I going to be out of town? I'm only going to miss so many nights. I'm only going to travel X number of days. And so I've set that goal for myself. And anytime it gets close to that, I shut it down and make sure that my family remains a priority. That's extremely important to me. And so I think that by maintaining that balance, it's going to help continue in the future. It's a very family oriented business, what we've created. So I want to maintain that.
Lindsay Davis, it's been more than a pleasure. Thanks for geeking out with me about real estate and some tax stuff and diving into these details on these numbers. I want to encourage you to keep using your gifts and talents to bless and help people live and invest in turnkey rentals, right? And get passive income and all the things that can make a big difference in this world. For our listeners who want to get in touch with you, one last time, what is the best place for them to find you?
The best place to find out all of our information. We've got market reports, investor guides. It's on our website, SpartanInvest.com. We have a plethora of FAQs, and you can also access all of our inventory, and that way you can analyze all of the deals yourself.
Awesome. Thanks, Lindsay Davis. I also want to thank all of our listeners for listening to another episode of the Capital Gains Tax Solutions and Build It to Billions podcast. Yes, we're streaming on both channels and both YouTube channels. I want to encourage you to continue this journey with us on our journey from scaling from millions to billions, so we can give it more, all of it away to help MVPs, the most vulnerable people. My name is Brett Swarts, and I want you to look at Spartan Invest, their SpartanInvest.com for your turnkey rental opportunities. And also, if you're exiting a massive Bitcoin business or real estate and you're ready to eliminate the need for the 1031 exchange and the hair on fire running around like we talked about here today, go to capitalgainstaxsolutions.com so you can build a capital gains tax exit plan that helps you to invest on your own terms and your own timing. That's capitalgainstaxsolutions.com. Appreciate everyone listening and watching out there, and we'll talk to you again real soon. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.